Hello everybody, Gbenga Olatunji here, welcoming you to James channel. Principle of taxation. That is what we want to study, especially the 7 principles of taxation. These are the pillars upon which the taxation system, a good tax system for that matter, is always built, and we are going to look at the definition, trying to define what a good tax system is. Then at the end of the day, we look at the principles, and for easy remembrance, the acronym that can help us in quickly remembering it. So let us look at the definition of tax, which can be defined in so many ways and has been defined in so many ways by Oxford Advanced Learner's Dictionary, like money that has to be paid to government so that it can pay for public services. The money that we have to pay to government so that government can do its job. The Black Dictionary said, especially the Black Law Dictionary, monetary charge imposed by the government on persons, entities, properties levied to yield public revenue. So everybody contributes to the welfare of everyone else for good governance and public utility. Thomas Cooley defined it to be enforced proportional contribution. So government enforced it on us from persons and property levied by the state by virtue of its sovereignty for the support of government and for all public needs. That's another fantastic definition, and don't forget you could be asked actually to define it in the exams. Last but not the least that we are looking at, which is more or less generic definition, is that tax is a compulsory contribution levied by a sovereign power on the income, profit, goods, services, properties of individuals or corporate organizations. It could be trust, it could be settlement and the like. So tax has come to stay with us. It's as constant as air and water. The 7 principles of taxation now. The first one, before we now go into the acronym so that we can easily remember it, a tax system, a good tax system should be certain. That is, the taxpayer should know exactly the amount of their tax liability, how it's being calculated, what the rate is, when to pay, how to pay, and the like. Majority of the questions that surround taxation and its collection should be answered easily. That talks about certainty. The taxpayer should know which tax authority is he or she or the organization paying to, the tax rates and the like. Then we talk about the economy in collection of taxes. Basically, collecting tax should be relatively lower than the amount of that is collected. The amount, the expenses, especially on the part of government now in collecting the taxes, should not be more than the amount being collected. Of course, that leads us to another principle of it. Then we talk about convenience. Paying or payment of taxes should be convenient, so there should be the method and the timing of tax payments should be convenient to taxpayers. It must be easy to locate the taxpayer too. So everything should be convenient so that the costs can be lower. We talk about efficiency. Talking about efficiency now, efficient tax system is the one that keeps its collection, media, and expenditure or expenses, as the case may be, as low as actually practicable. It must be efficient. Collection must be efficient. Then we'll talk about flexibility. We talk about flexibility. We talk about equity. Talking about flexibility now, a tax system must be flexible for it to serve as a veritable fiscal tool that could impact the society. The rate also of tax should be capable of being altered without much difficulty. And that is one of the reasons that government usually will allow that people should do self-assessment and you could pay in installments. It's all about the flexibility in tax payment and tax collection. Then when we are talking about equity, we are talking about ensuring that both the vertical equity and horizontal equity. What do we mean by vertical equity? Simply put, when we are talking about equity, we are ensuring that tax is fair to everybody. Equity simply means fairness. Tax is fair to everybody. Now, when we are talking about vertical equity, we are talking about equity system that involves rich taxpayers are paying more than the poor. That is fair, right? And also on the horizontal level, the poor or the people on a similar grade having a similar tax situation pay the same or similar. So that is equity. So it could be on the vertical, rich to the poor, and it could be on the horizontal, people of similar tax situation having the same or similar experience. Neutrality. Last but not the least of the seven is neutrality. A good tax system should not distort the economic choices in any form. But I could tell you by experience, which we agree with when it comes especially this aspect of neutrality, because one of the objective too of a good tax system is for social function, that is to regulate the society. And sometimes neutrality may be jeopardized by this objective. For example, let's say government is trying to discourage maybe purchase or involvement of citizenry in one thing or the other. They could tax it more so that people will be discouraged in involving in it. So that can tamper with neutrality. Anyway, I'm just chipping that one in, but these are the seven principles of tax. We talk about certainty, economy, convenience, efficiency, flexibility, equity, and neutrality. Then, to make it easy for us to remember, there is an acronym that we can use, even though there are many that we could form, but this one could come easy to us and handy. So, what is the acronym that we can easily use and I want us to use for the purpose of this study? I will say, if you can remember this, you can easily remember what they stand for. Sesefin or Sesefin. Sesefin. Simply put, the first C stands for certainty, E stands for equity, the next C stands for convenience, the The next E stands for efficiency. The next F stands for flexibility. The next E stands for equity, and N stands for neutrality. For objectivity in tax collection, in tax administration, one of the objectives as a bonus for you staying with us till the end, the objective of taxation: revenue generation, redistribution of income and wealth among the or within a community or society or country, as a fiscal tool also to stimulate the economic development, and like I said previously, social tool. Tax is a social tool, especially when it comes to governmental purposes. From GJ's Social channel, please don't forget to subscribe if you are yet to subscribe, like us, and next you can be sure of another important lectures.